Hey everybody, welcome to the latest episode of Shoe and Show. Thank you for joining us in 2025, or unless you're in 2027 listening to us in 2025. But we're in time-space continuum, so who really cares? Anyway, so 2025, kicking it off, we want to do a quick episode on the health of the industry, taking a look at a couple of new things that we've been tracking data-wise to get a better grasp of where the industry is and where it might be headed in 2025. Some of this is exclusive to our membership, but we do want to provide a little bit of insight. And it's always a good time if your company is not a member to join. It's more affordable than you imagine. You get greater benefits than you can conceive. You see that, Matt? There's two different adjectives I've used there. So
Blows your mind. That's crazy. I
that's
can't even
exactly right.
conceive the amount of benefit I will receive.
Well, the conception many people think of just happened in December, but the Great Conception. But in 2025, I conceive that FDRA needs more members, especially considering the tariff fight that we're in the midst of.
Yeah.
And all dues go to our programs, products, services, and duty fight because we are a nonprofit. So consider that too. If you're out there listening and your company's not a member, drop us a line to figure out how we can help support your company and help support your bottom line at the same time. But with all that said, Matt, let's
Andy.
get into some new data, some new insights that we have with our economist Gary.
Yeah, Gary Rains, welcome to the Shoe and Show program, my friend. Happy New Year. We're all still groggy. It's January 8th, and I still feel like I'm asleep. But nevertheless, I wanted to bring you in and have a conversation with you, myself, and Andy around inventory. Inventory has been kind of the top issue of our industry for a number of years now because of the historic levels of inventory we were all sitting on in 2022 in particular. And this notion that inventory levels would come down somewhat. And so you and I have been long salivating over the prospects of having an inventory report where the members report in their inventory, much like they do sales, e-commerce, and brick and mortar. And if you want to join those, reach out to us at info@fdra.org. Shameless plug. But people understandably are a little nervous about reporting their inventory numbers. So you came up with the next best, greatest thing, and that was tracking the inventory levels as reported out by publicly traded footwear companies and creating a quarterly index. And so we have our hands on the most recent quarterly index as it relates to inventory. And before we kind of unpack the numbers, just put a little color on your thought process as you pull this together and how you think it critically provides the insights that our members are looking for when it comes to inventory levels.
Sure. Certainly. Happy New Year. Great to reconnect here on this side of the changeover in the calendar to 2025. Yes, indeed. This inventory thing has been an issue that I've been, salivating over for some time. Really wanted to get something pulled together that I think gives some good insights on that side of the supply chain. But the inventory number is only based upon publicly traded companies' inventories that are reported each quarter. With those, we compile them, all these different inventory numbers reported by these publicly traded companies, and add them together. And we look at both the inventory numbers, the revenue numbers, this ratio of inventory divided by revenue to get an idea of how tight or loose the broader market is, and that itself tends to correlate pretty well with what's going on in prices. While that's all well and good, the two maybe shortcomings in it, of course, being that these are based on quarterly numbers. These numbers have a lag to them. The numbers are being reported. Here just a couple of weeks ago, we finished up reporting during the fourth quarter, which was based upon numbers in the third quarter. So it's got this lag to it. It's like reading yesterday's newspaper. That's all well and good, but people would rather read today's newspaper. The flip side, maybe the second issue to it is it's only based upon publicly traded companies. Certainly, there is a substantial slice of the market that is not publicly traded, to where we don't have much of a grasp on the inventory side on those non-public companies. But being what it is, certainly it is the best iteration so far. I'm always looking to expand this beyond its current iteration to get a better, I think, more accurate feel for what's going on in the market. But for now, yeah, we got a pretty good feel. Again, it's really a who's who of participants across the spectrum. And we've seen that these inventory numbers, you're right, they peaked back in 2022, third and fourth quarter, and have declined since then. We've said for some time that those inventory numbers, of course, were likely to decline, and we believed in 2024 needed to decline further to return a little more pricing power, to the industry. We really haven't seen that come to pass. These inventory numbers have been relatively flat, both quarter over quarter and year over year over the last 2 or 3 quarters of the year. So we'd expect to see those numbers would need to come down a little further in order to see that inventory to sales ratio tighten a little further, which in turn would give a little more pricing power back to the industry. Maybe the flip side of that, the dollar is pretty strong now. In fact, near its strongest in the last 2 years or so, and that has helped to kind of moderate the landed cost for footwear coming in. So that's maybe the silver lining, I suppose, that while there's not that pricing power returned to footwear brands and retailers that are importing that product, we haven't seen the average landed cost for footwear really increase very much over the last year as well. So that's kind of the silver lining to it. But yes, we would expect to need to see that inventory level to decline further deeper into 2025, we believe, to return more pricing power to the industry.
Well, I mean, I also think when we're looking at our data set, Gary, what you do a really good job of is comparing it to our other data sets too, to kind of compare, contrast, and get an even better picture. And I know as we talk about this, and we'll, want to get to those numbers that we're looking at now in the inventories, but we also do a quarterly survey of shoe executives that gives us more anecdotal information. It doesn't give us hard data in terms of what their inventories may be, but they give us an indication of which way the ship is headed. And we know, in the last one, the fourth quarter survey of shoe executives, the top 100 shoe executives report to us. We do a questionnaire of 25 questions, let's say. One of those is inventory. So inventories versus 6 months ago, they feel like they've pared it back a lot. But even inventories over the next 6 months, they're still working to pare those back as well. So I think it's just a constant reminder of their executives want to pare back their inventory, but is the reality matching what they actually want to do, right? So what did you see in the data in terms of the inventory report you put together?
Yeah, great question. While these inventory numbers, of course, only come out quarterly, we've had a pretty good feel for some time that they weren't likely to see a whole lot of a decline, both year over year and quarter over quarter, by looking at kind of interpolated numbers, particularly looking at import numbers and consumer spending numbers. We've seen that imports have still continued to grow modestly, on a year-over-year basis over the last couple of months. But we've seen that consumer spending has been, a little soft, maybe some months of positive growth, but then generally lagged the year-over-year growth in footwear imports. Well, using imports as a proxy for supply, when you got supply growing faster than demand, well, it's the Econ 101 surefire recipe for lower prices. And we've seen that softness reflected in both the landed cost for footwear and relatively flat retail prices for footwear. So it's really a surefire recipe, both looking at the inventory levels and looking at the import numbers and the consumption numbers, that we're kind of stuck in this period of relatively flat prices, both at the port and at the store shelf.
And I think in some ways we still have sounding, I don't know a better way to say it, but like this psychological hangover from all the supply chain whiplash we've had, to where
Sure.
people naturally are afraid not to have inventory in the warehouse, even if maybe they have excess, compared to what they were dealing with earlier. And I think, it just takes a while to like iron that out of our brains and not be too frightened by it. I remember one time I asked Sam Poser, who kind of tracks equities in these publicly traded companies. We had him on
Mhm.
Shoe and Show, a past episode, and I asked him, he was like, is it okay to run out of inventory? And he said, absolutely. That just means your demand is so high, then, you can better control your pricing and better control your brand equity and brand
Yeah.
image. But I think people are still a little bit frightened, especially with retail partners, to not have them fully stocked. But to your point, when demand is kind of tapering from the consumer, it's a little bit of a concern, especially in light of tariffs that are coming in, and that's the other thing that we talked about a lot too, Gary, is this idea of front loading
Sure.
or bringing in inventory ahead of the duties. And we know several companies have said that they are actively trying to take as many shoes in as possible to keep them in warehouse to try to curb the coming tariffs that they see.
Indeed, it's a catch-22 we're in right now. That on the one hand, as I said a moment ago, imports, footwear imports have been growing faster on a year-over-year basis than consumer spending on footwear has been growing. And again, supply growing faster than demand. But on the other hand, just like you said, the need for that front loading, to try to get a head start before these looming tariffs likely come into effect, you're kind of caught between a rock and a hard place, that you don't want to increase those imports because it's already outpacing demand. But on the other hand, you have to increase those imports to get in ahead of those increased tariffs. So it's really a prickly situation since the election in November, and until we see how these the fallout from any new tariffs come to pass here early in 2025.
Yeah, and I think in the executive survey, it shows that out when we asked about landed cost over the next 6 months, what they anticipated.
Yep.
Um, Huge jump from quarter three, even from quarter one, 2024. I mean, basically, they weren't anticipating in the first quarter of 2024 much of a
Mhm.
increase in landed costs in 2024, and then by the end of 2024, based on the election, almost 80% of respondents, maybe even more than that, expect their landed costs to significantly increase into mid 2025. So they see it's definitely coming.
Sure.
As they look at that. So historically, when you're looking at these inventories from publicly traded companies, I think for many years it was they were, for the most part, they've increased, year over year. There has been increases from like 2015 to let's say 2020. And then obviously COVID hit and everything kind of went whiplash. Are we, do you think we'll level it out at this point based on what you're looking at in the data?
Yeah,
Yeah,
before you
I
answer
don't.
that, Gary, let me just interject real quick to add on to Andy's point, because we've talked about this. We're elevated over kind of the average over the last decade, right? If you look back to
Sure.
our chart, and again, people can send us an email at info@fdra.org if they want to get access to this. But Q4 15 is when we tracked last 9 years ago, and so we're still even though we're down, we're elevated historically. And so, to Andy's point, maybe just to reiterate what he asked, like, are we just level set at a much higher level from an inventory perspective now? What does that mean for profitability and for cost management and distribution?
Yeah, a great question. In short, yes, we're at a higher inventory level now than we were 10 years ago, of course. Of course, the market is bigger. It makes sense that, revenues are bigger, so you'd expect that the inventories would be bigger. But as you said a moment ago, we are down from the peak witnessed in 2022. I think there is still more downside room. I think that inventory number needs to come lower than it is now. But no, we're not going to return back to an inventory level of 8 or 10 years ago at all. I don't think that's likely to happen anytime soon, just simply because the market is so much bigger than it was at 10 years ago. That brings us to what I was talking about earlier, that inventory to revenue ratio, kind of looking at the two of them. Yes, as inventories have grown, revenues have grown along with them. So over the long term, they tend to more or less balance out. Of course, we saw a dramatic swing in that ratio over the last couple of years with that inventory number going so high, and of course, in the early days of COVID, with the revenue numbers going so volatile, lower than higher. But I think once we get a little further down the road into 2025, we'll see a return to normalcy in that ratio, that inventory to revenue ratio. And I think that'll be much more telling for price prospects deeper into 2025.
That's a lot of stuff to think about as we go through this. And yeah, I mean, even when you were talking about like a higher, we're at a higher level set. We had those conversations with the folks where, we had record levels of spending on footwear during COVID, and then coming off of that, people were a little grumpy because their comps weren't as good. And it's like, yeah, but you're comping against records, right? It's still pretty good. But in terms of inventory, also anecdotally beyond the data sets, we know that Nike spent a lot of time over the holiday trying to discount their footwear in different places, even online, to move more of their inventory out as they try to get new product in. So I guess the other point of all of this too is the movement of new inventory into the marketplace to try to keep the dynamism of our industry going and the consumer to keep coming back. And how you balance that, I think, is a difficult interplay when you're looking at operations.
Yeah, I totally agree. I mean, we are an industry that's built on innovation and fashion and change, right? And so there's only a handful of things that have these iconic, this iconic sales, and even ebbs and flows. You think of the Chuck Taylor or the Samba, or some of these shoes that are really iconic, but they kind of have their ups and downs along the way. And the companies need to get the consumer a little bit more excited about product by driving out new product. And if you have a consumer that's a little bit more hesitant to spend their dollar because the economic headwinds are a little stronger, as we expect this year, then it's going to be all the more important that product is relevant and compelling, and not just old stuff that's been sitting in a warehouse for a couple of years that you're just now selling through.
Absolutely.
Yeah. Well, I mean, this is one thing that we're going to keep track on. Obviously, we keep track now on material costs at the factory level. We keep track of shipping costs, air freight costs. We look at factory costs, factory compliance issues, wages. We look at import costs. We look at warehouse costs, transit costs, retail labor costs. Then we look at sales data from e-commerce. We look at sales data from brick and mortar. We look at total shoe consumption in the U.S. We look at disposable income and issues with that from the consumer to see what their purchasing power is. So when we talk about, as an organization, we're tracking all these things to help people make better business decisions. It goes from the first idea of what a shoe might be designed or known with our IP report, all the way through to where that shoe is sold, whether it's a click of a mouse or a keypad now, or your phone or whatever, to the cash register ringing. We're keeping track of all of that and trying to help people understand the dynamic marketplace that is footwear. And as we head into 2025, again, if you're not a member, reach out to us and let's chat to see how we can support your business, and then how your membership can help support fighting duties and these increased landed costs, as we all try to work together to make our industry more vibrant, and also support the customer, because the customer is going to pay. And the more they pay, the less we sell. So keep that in mind as we go into it. As Matt said, we're a little sluggish and our eyes are a little bit tired, but we're juicing up with caffeine, and we'll be raring in the next week or two. And we'll keep pushing on in 2025. Gary, we appreciate you coming on and sharing what you're working on. And of course, every Tuesday at 2 p.m., Gary comes on with a new data set for the industry. It's our member only call. We have 100-something companies come on every single week to get the latest information that we're dropping to help them make decisions in real time on inventory levels, marketing campaigns, sales strategy, etc. So we, again, invite you to join that call if you're a member. If you're not, drop us a line. And I'll remind people, if you can't join the call, we bank these. We record those calls and we bank those in our Intel Center. And I know we've got a lot of listeners overseas. And obviously with time differences, it might be a challenge, but we do have those recordings. If you want to reach out to us, we'll show you where those are so that you can get that information as well. Matt, missing anything else as we kind of wrap this up?
I don't think so, Andy. I think we nailed it. We're tracking inventory, data, services, trade, etc., logistics, supply chain, port slowdown. Everything's happening all at once again, and we're on it. So happy 2025, everybody. Welcome back.
Yep. Our full catalog of episodes is shoeandshow.com. We appreciate you listening. Until next time, Shoein is out.
Shoein has been brought to you by the FDRA, the Footwear Industries Association focused on retail, trade, politics, and fashion, helping create and enhance conversations on all things footwear. For information about FDRA, Visit FDRA.org.